Because if you don't grow your asset or the balance sheet, that means you're not lending in the market. So if you're not lending in the market, who gets hit? It's the businesses. For a bank to increase its balance sheet, it needs capital. That's the formula that it operates, unlike anything else. Now, normally what would happen is a bank would accumulate that capital in some form through retained earnings. When you're profitable, you basically add that to capital, and automatically that allows you to grow your balance sheet. So that's basically how the banks operate. This year is going to be challenging because that profit growth, if you want to call it, may not come because of the high levels of impairment that you're looking for international security, that is ISBs, SLDBs, and the basically loan portfolio. So then the question arises about whether the banks would have enough capital to grow their business. That in turn has an impact on the economy. But if you don't grow your asset or the balance sheet, that means you're not lending in the market. So if you're not lending in the market, who gets hit? It's the businesses, right? So they will also not be able to grow. So there is a cyclical effect in this whole equation. And one of the things I think the government did in the past was that they reduced taxation to some extent in order for you to build that capital buffer. So I don't know. Government will have to think also in some of these things, but the government is going to be challenged because IMF and all these people are saying that tax is not enough, so they want to put tax. And what I heard from the previous one of these topics is that a good part of the tax comes from the banks. So you go and reduce this. How are they going to bridge this balance is the question, because from where are you going to get it? Businesses probably may not be doing too well, tax base is going down. So this is an equation that will have to get balanced in some form or the other, because one has an impact on the other. You can squeeze the banks, no doubt, then their capital will go down, then the lending will go down, and then it will have an impact on the economy. On the other side, if you don't squeeze the banks, how are they going to bridge the income gap from the government side is the next question.